Hello world, welcome. I'm your host, Mr. Stagg. Today we dive into the hidden empire moving trillions of dollars across borders, rebuilding nations, shaping economies, and stirring controversy at the highest levels. Now imagine this, a bank not built to serve customers but countries. One that can reshape economies, remove presidents, and start revolutions, not with guns but with money. Today, we uncover the World Bank, the most powerful financial institution you've probably never opened an account with. It controls billions, affects trillions, and answers to almost no one. But behind the glass buildings and smiling press photos is a story of power, politics, controversy, and enough influence to shape the fate of the world. Everyone's heard of it, but few know where it came from or how much influence it really holds. Is it a force for good or just another instrument of global power? Most people think of the World Bank as a polite organization in Washington, D.C., handing out loans to poor countries. But behind the diplomatic language is a financial machine, tied to the most powerful economies on Earth, with enormous influence over the destiny of entire continents. And if it were a private company, it would be worth hundreds of billions. Like, subscribe and share if you enjoy business deep dives like this one. Let's dive in. As World War II raged on, 44 Allied nations met in Bretton Woods, New Hampshire, to design a new global financial order. Their goal? To avoid the economic chaos that led to the Great Depression and the rise of fascism. Out of that meeting came two financial giants, the International Monetary Fund, IMF, and the International Bank for Reconstruction and Development, IBRD, what we now call the World Bank. While the IMF was designed to stabilize exchange rates and provide short-term loans, the World Bank was tasked with a different job, rebuilding nations. Its very first mission was to help rebuild Europe after World War II. The first ever loan, $250 million in 1947 to France, to help rebuild its shattered economy. But from the beginning, the World Bank was more than just a bank. It was a tool for shaping the New World Order, and the United States, as the emerging superpower, was firmly at the wheel. Who were the masterminds behind the World Bank? The intellectual father of Bretton Woods was John Maynard Keynes, the British economist, famous for his revolutionary ideas about government spending and intervention in markets. Keynes argued that rebuilding war-torn nations was essential to securing global peace, but the real muscle behind the World Bank was the United States. Harry Dexter White, a senior U.S. Treasury official, ensured American dominance in the new system, giving the U.S. veto power in the World Bank's decision-making. At its start, the World Bank was small. Its early loans were cautious, primarily funding infrastructure, roads, bridges, railways, and power plants. These were seen as the backbone of any rebuilding effort. So, how does it make money? The World Bank sells AAA-rated bonds to global investors. That's the key. Countries, pension funds, insurance companies, they all buy these bonds because they're super safe. The bank then lends that money at low interest rates to developing nations. It's 5 institutions in one. 1, IBRD loans for middle-income nations. 2, IDA, International Development Association, low interest or zero interest loans to the poorest countries. 3, IFC, International Finance Corporation, focused on private sector development. 4, MIGA, Multilateral Investment Guarantee Agency, offering political risk insurance. 5, ICSID, International Center for Settlement of Investment Disputes, providing arbitration for disputes between governments and foreign investors. All told, the World Bank has over $1 trillion in assets based on its combined operations and balance sheets. If the World Bank were a private corporation with revenue from loan spreads, fees and services, economists estimate it would be worth over $1.2 trillion today, making it bigger than JP Morgan Chase, the largest US bank by assets. But unlike Chase, its purpose isn't profit, it's power. And who controls it? The United States has the largest single voting share at around 16%, meaning nothing major happens without Washington's approval. Over time, though, the mission expanded. By the 1950s and 60s, the World Bank wasn't just funding reconstruction. It was actively shaping the economies of newly independent countries across Africa, Asia, and Latin America. As the decades rolled on, the World Bank transformed into something much bigger and far more controversial. By the 1970s, its focus had shifted to the developing world. It offered massive loans for dams, highways, and large-scale agricultural projects. These projects were supposed to lift countries out of poverty, but many of them ended up doing the opposite. Critics argue that the World Bank often pushed developing nations into debt traps, offering loans they couldn't repay, tied to conditions that forced countries to privatize their industries or cut social programs. Fun fact, all World Bank presidents have been American, every single one. The most famous, Robert McNamara, the US Secretary of Defense during the Vietnam War. Under his leadership, the World Bank ballooned in size and influence. Today's president is Ajay Banga, the former CEO of MasterCard, and the first of Indian descent to lead the institution. His job, modernize the bank and push it toward climate finance, sustainability, and more aggressive global development goals. But it's not just about development. These presidents answer directly to the world's richest economies, especially the US. Was it really development or was it control? The World Bank became both a lifeline for some and a symbol of exploitation for others. The numbers are mind-blowing. Over 12,000 projects completed. Active in 170 countries, approved more than $100 billion in new lending in 2023 alone. Want a clean water project in Cambodia? The World Bank's there. Need financing for a solar energy project in Morocco? The World Bank's checkbook is open, but critics ask, at what cost? As of 2024, the World Bank had committed over $104 billion globally in annual projects. They operate over 10,000 employees, an annual budget exceeding $50 billion, and offices in more than 120 countries. One of its major initiatives today is climate finance. The World Bank has pledged hundreds of billions to help developing nations adapt to the challenges of climate change, building resilience into economies that are most vulnerable to rising seas, droughts, and extreme weather. Behind the smiling press releases, there's been plenty of controversy. Many of the World Bank's loans come with strings attached. Privatize your water utilities, cut public health budgets, open your economy to foreign investors. Some nations saw growth from these policies. Others saw protests, inflation, and cuts to essential services. And it gets worse. In 2021, World Bank leadership was caught manipulating data to boost China's ranking in its Doing Business report, a scandal that led to resignations and distrust in the bank's impartiality. Is this development or control? But controversies continue. The World Bank has been criticized for funding fossil fuel projects, even while promoting green energy. Human rights groups argue that certain projects have displaced indigenous communities or harmed fragile ecosystems. Leadership at the World Bank walks a tightrope, balancing the needs of the poorest countries while responding to the political interests of the richest donor nations. It's an institution of paradoxes, praised for its role in reducing extreme poverty, yet condemned for perpetuating inequality in certain regions. While the World Bank has financed thousands of development projects around the globe, its legacy isn't without deep controversy, and in some cases, outright scandal. One of the most criticized aspects of the World Bank has been its structural adjustment programs, SAPs, during the 1980s and 1990s. These programs offered loans to struggling countries, but came with strict conditions. Governments were often required to cut public spending, reduce subsidies, privatize industries, and open up markets to foreign competition. While these reforms were meant to stimulate growth, in many places they led to widespread poverty, reduced access to healthcare and education, and social unrest. Critics argued that the World Bank and its partner, the IMF, were forcing neoliberal economic policies on countries that weren't ready for them. There have also been environmental controversies. One infamous case was the Narmada Dam project in India, where over 200,000 people were displaced, many of them indigenous populations. After global protests, the World Bank eventually withdrew from the project, but not before its reputation took a major hit. Another point of criticism, the disproportionate influence of wealthy countries, especially the US, over decision-making. Developing nations often argue that their voices are ignored in favor of the political interests of major donors. In recent years, internal whistleblowers have accused the institution of data manipulation in its influential Doing Business report, allegedly favoring countries based on political pressures. In fact, in 2021, the entire Doing Business report was discontinued after these revelations. Despite efforts at reform, many critics say that the World Bank still represents top-down development, with powerful nations making decisions for poorer ones without enough local input. Even with new leadership, the controversies remind us that for every road built or school funded, there may be people left behind in the process. So what's next for the World Bank? Looking ahead, the World Bank faces both unprecedented challenges and opportunities. Climate change is now at the forefront, with the bank committing billions to green energy, sustainable agriculture, and climate resilience. Digital transformation is another focus, supporting internet access, fintech, and digital governance in emerging economies. The bank also champions gender equality and inclusive development, recognizing that economic growth must benefit all segments of society. However, geopolitical shifts pose challenges. China's growing influence via the Belt and Road Initiative competes with the bank's traditional role. Emerging economies demand greater say in decision-making, but one thing remains clear: the World Bank's mission to finance development and reduce poverty is as critical as ever, evolving to meet the needs of a rapidly changing global landscape. The world it operates in is changing rapidly. China's rise, for example, has led to competition from institutions like the Asian Infrastructure Investment Bank, AIIB, and China's Belt and Road Initiative. Developing nations now have alternatives, and they're not always looking west anymore. Meanwhile, the World Bank is under pressure to modernize, to make loans faster, focus more on climate, and reduce bureaucracy. Some believe that with proper reform, the World Bank can still be a powerful tool for good. Others believe it needs a complete overhaul to break free of the influence of wealthy nations. Either way, one thing's for sure: the World Bank's decisions will help shape the 21st century in ways few truly understand. Thanks for watching. What do you think? Powerful ally or silent empire? Drop your thoughts below. If you enjoyed this deep dive into the untold story of the World Bank, hit like and subscribe to Stag Research, your home for founder legacies, financial empires, and business deep dives. Got a take on the future of global finance? Drop it below. Mr. Stag, logging off.